Well, welcome in, and I'm sure we'll have some more stragglers later on to this coffee in the closed session. Dennis already has his Hawaiian shirt on. I guess you're going to a fun event after, or what's going on?
No, nothing in particular. Just something better than a t-shirt today.
Oh, I almost did no t-shirt because down here it's just so hot, and then I was just
Oh,
like, no, I should still wear a shirt for the call. Um,
Good move.
yeah, yeah. The only thing we switched out is normally it's coffee, and this time it's a coconut. So
Where is this? I'm sorry. Where are you now, Jonathan?
in Costa Rica.
Okay. Okay.
Tough
I
life.
was telling Steve my parents got sick. They both had influenza A, so I took care of them a couple weeks, and now that they're good to go, I came down here. So it's just kind of waiting for that. So yeah, be down here a while. We'll see what's next. Jose, I haven't been back to Peru in 5 years, so I might make my way down there this time around.
Really, I have to go there late year, early January. So
Okay.
I will be there. So yes,
Oh, that'd be epic if we get to meet up down there.
anywhere.
Um, I guess
You guys,
everybody's had
am I invited?
Oh, of course, man. You already you knocked off you went to some of my recommended places in Cartagena, didn't you?
Yeah, it was cool. Very cool. Nice recommendations, by the way.
You were able to get some work done from the cafes?
Yeah, I try not to, but yeah.
Yes. I guess everybody's also in a jovial mood because it's been a relatively good week for biotech. Any star performers or thoughts come to mind? It seems like everybody's had a pretty decent week.
You just keep it going.
Yeah.
Yeah.
One thing that was nice for me to see is we're seeing a lot more data runners like Unicure with their Huntington's data is the latest one. But it's nice seeing companies jump 100, 200% in response to data. It's been quite a while since the environment feels that way. And so that's a good sign of health for the sector.
That was pretty good data, though.
Oh, yeah. They didn't do anything much, just cured Huntington's, no big deal. Well, not cure, but add a
Yeah.
lot more good high quality years for these patients if they can. My only hang up there was I think they had the high dose data was only 12 participants maybe. So I kind of wonder how that works for regulatory approval. I understand how that would work, Rocket and Danon disease, where it's very harder to find these patients, but this is Huntington's, which is a really broad indication. So I think hindsight is 2020. Like I looked up my notes from when Unicure was at far lower levels, and you would think, looking at the notes, it said the valuation, they had FDA alignment for the path forward, you name it, and so you kind of kick yourself saying, "Why wasn't I in there?" But as another guy said to me today, all the binaries look super easy in hindsight. I think it was Dirk, but the hard part is putting your money where your mouth is.
And so you put your coconut where your mouth is.
Yes, exactly. Speaking of binaries, I liked that we had a new member, and sometimes when we have new members, they're afraid to step on my toes. But you guys know the long timers that I actually like it when people attack my ideas, my holdings. That's how we all get better. And he kind of said to me, all these binary runners are running lately. You should change your style completely, or you should at least take the portfolio from where it is and have 50% of them in binary names. And first I thanked him because I like it when people push back, but that's also what's known as style drift, where you have something that's working for you, but when you see another style working better, you're like, I'm going to go chase that. I'm going to go chase AI stocks, or if I'm a value investor, I'm going to chase growth. And I feel like I've got that niche pretty well worked out for me, whether it's commercial stage companies, with launch prospects, or it's late stage clinical where they're already in phase 3 or pre-BLA filing. And so it's just, what I explained to him is if my style drifts, chances are I'm just going to pick the binary losers for you guys, or for every one big unicure we'll have 3 more losers. People forget about a tier, ATYR, 90% loser. there's usually a lot more losers than winners there. So that's a great sandbox for the right people. So right or wrong, that's not for me though. I know, as Tom calls those, the Uber squirrels, right?
For sure. You got to watch them. The squirrels make a mess out of everything.
Speaking of squirrels, we've had a lot of these trades where the rationale in the portfolio has been taking money from the squirrels from clinical and moving them to commercial. So I took partial profits in Arrowhead after it doubled for us, in Corvus on the run up into atopic dermatitis data. Both of those, I was planning to hold them into more results, later this year, next year, et cetera. But with nothing else I wanted to sell, it just kind of kept having the same rationale that, okay, these companies have run up. There's other lower priced commercial launch ideas I want to get into. So I took the money from the clinical winners and sold them completely and moved into the commercial, which still gave me that high upside of hopefully looking at a double multi-year time frame or more. But it's interesting because now the core biotech portfolio is back down to only 16% clinical. And two of those clinical names could become commercial if they get drug approvals within the next couple of months. And personally, some people might rag on me for that, saying I should have more binary exposure. But for me, that's actually quite exciting. We have some really good launch stories into 2025, 26, 27. And I always say the big money is made holding patiently a strong management team executes. So personally, I like where that's going. Go ahead. And another thing I was just saying, with all these dips and pullbacks here and there, we've had some rough days. It's yo-yo. We'll have a Monday, Tuesday where everybody's happy in chat, and then Wednesday, Thursday where there's a decent pullback or another Trump headline going after biotech or whatever it is, and or something saying we're not going to get the rate cuts. And I've been using those, as you all saw in chat, to take new money from my bank account and make DCA, dollar cost average purchases, adds to the highest quality names we have on these pullbacks. And so I kind of look at it as I'm just kind of focusing on what I can control. I would be afraid to do that with binary names because you never know how low they can go. There's no downside cushion. But for these clinical names like Harrow or Syndax, et cetera, where you have approved drug sales, you have an idea of how far they could fall. And that goes along with my mentality. Like I said, it's important when everything gets bubbly and everybody is having that FOMO, that fear of missing out, myself included, especially, to have that base hits versus home run mentality. So for me, if I'm not trying to swing for the fences, if I'm finding these very high quality setups, very asymmetric risk reward profile, some of those will end up just being home runs because they work out. The blue sky scenario works out. But I'm not trying to, swing for the fence here, go for broke. Heads, we win big. Tails, it's a zero. That's just not for me. A few other things, and then I'll open the floor to everybody. I think it's important to hunt where there's tailwinds. So right now, I think there's tailwinds in the rare disease space. You have a very friendly FDA, so that's one of the areas that I've been hunting for new ideas in. And then Harrow, HROW, is running today, and it seems like a lot of growth investors are posting on it on X. If you saw today, these accounts that have 100,000, 300, 500,000 followers, and who typically don't do biotech, but they're all posting about Harrow now because it meets their metrics. They're talking about they're going to have a 1 billion annual revenue run rate by the end of 27 or whatnot. And so all of a sudden, because there's not as much binary risk here, it's all about sales growth. It fits their selection criteria. So you have a whole broader audience who are coming to biotech. And so that's another hunting ground for me, as I'm trying to find these companies that can morph into growth stocks, stocks that appeal to a far broader audience than biotech. So that's another hunting ground for me. So with that, the floor is open. You guys, how you're feeling, what ideas you're looking at. Tom, I saw you mentioned a few of your ads today in chat, including, I'm forgetting names. I'll leave that to you.
Well, yeah, one we were going back and forth on was Verica, which has been in and out of favor. I'm just kind of starting
VRCA, Verica.
Correct. Yep. Just starting to warm up to that one again. It's not a big position, but it they've got a new CEO as of maybe about a year ago, and they've retooled the sales organization. They just got a partnership approval in Japan, and they get a $10 million spiff out of that. They're not loaded with cash, but the market cap is under 40 million, so it doesn't take a whole lot of cash to. I was surprised when they got a $10 million spiff on a $40 million market cap that it didn't really move the needle. And so they're kind of bumping along at a very low level. And I don't think it'll take too much for them to pop up. They've also gone through a reverse split. And so the share count's fairly low. And when you figure that Paul Manning owns over a third of the company, with a $9 million float in or outstanding share count in total, there's only about $4 million of float. So I think there's good potential on Verica. I'm not all in with both feet at this point, but I think it's one worth looking at.
Reminds me how you did with Zevra, the rare disease company, ZVRA, where similar to Verica, it might not meet my personal criteria just because I think I was worried about their IP for both of those. And for Zevra, once they get through that initial group of patients that's identified, how this the Niemann-Pick syndrome (NPC) or whatever the name of that indication is. But it's nice that for Tom, he's not looking at that a few years out. He's like, what do I need here for sentiment to improve and get my 50% up move or get my double? And Zevra rebounded pretty nice. And I thought that was a great example of your approach. Buy it when it's unloved. You're looking at what catalyst could cause it to rebound, and then you sell and move on. One I was very skeptical of, Coherus, CHRS. As you know, I liked the value, but not the pipeline. And you're sitting on that lately has worked out finally in your favor as well.
It's pulled back a little bit, but it was down at 80, 85 cents and it popped up to 160. So, one of the problems with the penny stocks is that, they move a dime and you want to shrug your shoulders and go, it only moved a dime. But, when it's down at 80 cents, that's like 15%, So, it went from 80, 85 up to $1.60. That's a double. And even at $1.60, the market cap is ridiculously cheap. And I think the thing with Coherus is whether they show growing Loqtorzi sales of any substance. If they can start to make that franchise work, they're probably at least 6 months away from any, I think, material data on their pipeline, which is kind of where the future bet is. But they could unlock a partnership at any point in time, and with Tory being a key part of the Junshi, however you say it, Junshi, whatever they are, the Chinese company. They've got a lot of trials ongoing as well, so it's hard to know exactly what the read-through might be on Tory, that could come out of left field. And I think the other thing, quite honestly, with Coherus, if I were a CEO in, pick a company, Excel or maybe INSEE or somebody that's not maybe a mega huge company, but somebody that wanted to have an oncology program, or maybe had one, but they wanted to beef it up. I mean, you think of Excel, they've really got like one or two products, and they could go out for half of the cash that they've got and pick up Coherus and have a whole PD-1 program, another commercial drug, and all of the pipeline. And, for 700 million or 800 million bucks, I think they'd be getting an awful lot that would bolt into their program. So I think Coherus could get gobbled up if somebody wants to step up to the plate.
I like that that's not the center of your thesis, but it's nice if it happens. It's interesting this year, the core biotech portfolio is up around 35 to 40% versus think we have XBI and BBC around 8 to 10%. But interestingly, none of that has been any, I don't think I've had any major buyouts this year for the portfolio. Like in prior years, we had big ones in Orchard or Immunogen, you name it. And this year it's been more just sales momentum, run-ups into the clinical data. So, I mean, color me a bit disappointed, like names like Syndax, SNDX. I would think that would be a no-brainer for their 50-50 partner for Niktimvo, the graft versus host disorder drug to scoop up, but it hasn't happened yet, but that would be nice. Kura Oncology, likewise, their second drug, the farnesyl transferase inhibitor, has some early data at ESMO in October, and I'm sure it'll be way too early to see too much. But Tom mentioned Exelixis, EXEL, where Cabo, their lead drug, is doing something like $2 billion a year in sales. And Kura's second drug would address resistance, help if it becomes the combination partner of choice for Cabo or for KRAS inhibitors or other big categories, PIK3A, that could be at the moment, Kura is only valued at 150 million, 200 million enterprise value because they have a lot of cash. So I agree with you on these value disconnects. Just because the sector is rebounding doesn't mean there's a lot of really good value ideas out there if you look for them. No, thank you, Hubi. Hubi mentioned our only buyout for me this year was SpringWorks Therapeutics, SWTX. And as you all remember, that premium was extremely disappointing for all the patients we showed there. So.
Right on. Tom, next week is a big week for you, right? With FBio?
Well, fingers crossed. I told everybody in the forum at the beginning of the year that I was working very hard this year to be more unstupid. And, I had FBio up at about 30% of my portfolio, and it ran it up from, about $1.80 average to mid to upper threes. And, with a double on it and at that point in time, no risk on 30% of the portfolio, I was kind of like, I think being unstupid means you don't go into a binary date with, 30% betting on the FDA. I don't like to bet on the FDA at all.
Right.
So I've been peeling back FBio. I've got it down in the maybe 10% range. I've sold 2/3 of it.
Okay, I was about to ask what the maximum it was of your portfolio. I think it was like 30%, right?
Yeah, at its peak, it was up, 25 to 30%, and then I've probably sold half to 2/3 of it. I'm still, I mean, my standard rules are no more than 2% on a binary event. So I'm 5 times over my rules at 10%. So I'm kind of breaking the mold, but I do think um, the data and the absence of competition and all the designations that the FDA has given QTX 101, CUTX 101, the drug that's up on Tuesday for Cyprium, the subsidiary of FBio. I mean, it's got all the FDA designations attached to it. Apparently, it went through a rejection 2 years ago for manufacturing. So, from what I'm reading, I don't know if it's exactly the same drug, but what I'm reading is it's a second rodeo on the manufacturing ding. If that's accurate, you've got all these designations, you don't have any other competition existing in the marketplace. It seemed, the efficacy I think is unquestionable. The safety's fine. So, I mean, the only thing that I see coming out of left field would be manufacturing, and they've already played that out. So, I'm feeling like going into it with a 10% position is breaking my rules, but not completely stupid.
Okay, sounds good.
I like
Well, I
what you
know
said.
with,
Go ahead.
I was just going to say with the FBio preferred, I've seen people refer to this as a binary event, but it's not really a binary event. If the drug is for some reason rejected, FBio still owes the money for the dividends. And that just means they'll have to monetize something else. So I also think that's a good play.
Fair point.
I would agree. There's a lot of other moving pieces. I mean, it's going to get whacked. If there's a CRL, it's going to get whacked.
Right.
There's enough other stuff there that, frankly, all the other stuff is worth more than its current market cap, even with the run-up. So
Yeah.
it fundamentally is a company that doesn't make much sense being valued where it's valued.
I like what you said about rules, and it's funny how you can break your rules a bit. In my case, I kind of like my dad that I'm an all or nothing guy. So with my rules, I either follow them or I don't. For example, for clinical stage biotech, maximum allowed for my initial position, it can grow from there, but my initial position, 5% of the portfolio and 10% for commercial. I try to trade mainly 4 days per month. As you all saw, for September, I traded 4 separate days, a couple of new entries. I'm stocking some new ideas for October, new entries that I've shared in Playbook. If you haven't seen the Playbook post yet, some more commercial stage ideas, but I'm not rushing my trades. And it's like Tom said, those rules help me to not to make unstupid decisions, to non-idiotic decisions. I remember when I first started investing in 2008, I didn't know almost anything about biotech, and I remember just going all in on phase 3 data readouts where you think you have an edge, but you're just fooling yourself. You have no idea what's going to come, and when you're wrong and your account tanks, 50%. That's not losing 50% of a 10% position. That was 10% of your portfolio. That's losing 50% of your portfolio. Like it's like you're just sitting there and letting somebody just punch you in the gut. It's horrible. And
Yeah.
so I know we've all been there. And so that's for me, like if I break those rules again, and I say, oh, I really like Syndax, I'm going to go 20% of my portfolio there. The problem is, even if it works out for Syndax, there will be other ideas where I break the rule again and it goes the opposite direction. And so for me, it's all about longevity, living to fight another day, consistency, compounding. So I appreciate what Tom is doing there. My caution is, at least to myself, I'm like, oh, I want to be like Tom. And I'm like, nope, I'm not allowed to break my rules. I know myself.
Yeah.
Hey,
Yeah,
hey,
I've done the same thing in regards to FI. I've been taking profits. It's nice to take profits. What happened to me, a year ago, a little more, was that I went 80% on Iovance, and that was up
Okay.
and that was up like 400% at one point, and they never sold.
Oh,
I came all the way back down, and they kept watching it week after week, just keep going down, and they sold losing 10%. So not anymore.
hey, we all have to do that, man. I've so been there. I so feel that where you're just every day you're watching it like, okay, maybe this will be the day or this will be the week, and you feel powerless as it slides down to pull the trigger or to take a loss and move on. I hear you.
Well, I think too. I mean, in the last 3, 4, 5 months, I mean, for me, they've been pretty incredible. Um, Rigel took off and that one flipped and was the beginning, and Coherus doubled, and FBio's more than doubled, and PLX is up from $1.30 to a little over $2. And so, I mean, pretty much everything, Cura has worked out really great. So I'm sitting on a very, very nice gain. And, one of the problems is you can be doing extremely well and it sort of invites stupidity because you feel like you're playing with fake money. Uh, but you realize it's not fake money as soon as it goes away, I mean, when you're up and it's great, it's oh wow, I can do these things, and then it goes away and it's like, well, wait a minute, that wasn't fake money. So, I'm selling off FBio, getting it down to the current level. I think it's a very high probability that it's going to get approved and it's going to go up, but I like, for me, it's kind of a measure of um, do you feel worse about losing 50% of a big position versus missing out on the gain of, the differential between a smaller position and the gain you would have had. And I think you've really got to put it in that perspective. I mean, it's painful to not participate in something that's running, but to me, it's more painful to participate in something that crashed.
I agree with you 100%. And the other encouragement, I think, is I remember at the beginning of the year, from what you told me, you had like a slow start to the year and we're struggling a bit, or at least, break even or negative. But the nice thing is you're able to enjoy all these gains now because you didn't make any stupid decisions to start the year, where a lot of times are, at least for me, if things aren't going well, I'll want to trade more often and I'll overtrade and I'll make bad, dumb decisions, or my selection criteria, I'll stray. So I'll do more early stage biotech or something I'm clearly not good at. And so what's nice is your account's doing really well. You've had a really good year, but the reason you've had a really good year is because you didn't have that death by 1,000 cuts, that making bad decisions, digging yourself into a hole. And then when you make money, you're just break even. So kudos
For
on that.
sure. Yep.
Yeah, and I think Jose, I followed you on one, which was Insmed. I think you sold it around $100 per
90,
share and 90 something.
90.
And
Yeah.
I asked you, it's still going through a PDUFA. Like, are you selling before? And you told me, yes, I'm comfortable with my gains. I'm taking my profit and moving on. And yeah, it could run up twice, like double from there,
And
but
it did. Yes,
almost.
it ran way higher. I don't deny that I was like, oh my God, what did I do? But yeah, that was
And
it. Decision made.
yeah, and I sold at 115. So, I saw it just yesterday at 145, and I was like, oh man, like I should have kept it. But some stocks just run higher, way higher than even like the projected peak sales, and what can you do?
Well,
But
to
it's
reiterate,
great to
yeah, go ahead. Sorry.
yeah, it's great to just take profit and just call it a day sometimes.
Well, to reiterate what Tom said, which one do you feel better about, participating fully when, the stock jumps another 50% or doubles, or how do you feel when you have full participation and then something happens and it gaps down 50%, and I know myself, at least, those gut punches, I could handle them a lot better in my 20s. But, in a couple of weeks, I turned 40 and I'm just like, I'm getting to that point where I still want high return. I'm very ambitious with what I want to do with my account, where I want to see it grow in coming years. But I don't want that risk. I want to always, even our most recent trades where I sold 2 clinicals and moved into a new launch story, it was the same idea. I'm getting that high upside potential where the stock could double over a multi-year time frame, and I'm eliminating some of the binary risk in my portfolio.
I'm curious, a question, for you, Jonathan, and the group. Got into a conversation with my brother a few days ago, and he's much more of a trader, but I mean, he spent his entire career in finance and commodities, but very much in a trading mode. But we were talking about the market in general, and his response was, well, everybody's saying it's overvalued. And I was looking at the S&P, and if you look at recent peaks, I mean, this was a few days ago, so I don't know exactly what's moved, but S&P was up maybe 15% over its most recent peak. And I looked at the XBI, and it was still maybe 3 to 5% below its most recent peak. So I think there's an argument to be made that, the biotechs haven't necessarily heated up to the degree that SPY has. But I'm just kind of wondering how everybody feels about the vulnerability of biotech as we sit here right now with a very highly valued SPY.
Hey, I just want to, sorry to interrupt. I just wanted to offer something on Fortress Bio before we move on from F Bio.
Hey,
Which
remind me
is,
your name again, my friend.
yeah, of course. It should be showing up at the bottom of
Oh,
my
there it is. It
Zoom.
wasn't showing for me. Michael, good to meet you,
Yeah,
my friend.
yeah.
Go for it.
Hey, good. Yeah, no, good to meet you as well. So, just to offer a contrarian point of perspective, or at least an important point, I think just from a portfolio management perspective, that's kind of like independent of whether it's a biotech company or what have you. But so just full disclosure, so I actually have a decent sized position in Fortress Bio right now. Obviously with a nice gain. And I've actually followed Fortress Bio for many years. And I've also followed the children of Fortress Bio as well. So two cautionary points that I want to make, like having disclosed that I do hold a long position in Fortress Bio. So one is, so just generally, you always expect holding companies to trade at a discount to their net asset value, right? And that's true across the board. Like that's true across sectors. So that's not something specific to biotech. But when you encounter situations like Fortress Bio, you never expect the stock price of Fortress Bio to fully reflect the value of the cash and subsidiaries, et cetera, that are owned by Fortress Bio. So that's just sort of a number one cautionary statement is I think anyone that owns Fortress Bio should disabuse themselves of the expectation that at any point Fortress Bio stock price is going to fully reflect the value of its cash and all its consolidated subsidiaries
You're
and
saying it could rise
unconsolidated.
some, but it's not going to come all the way up to,
Yeah, no,
where
exactly.
papers
Yeah.
stand.
Yeah, no, these holding companies always trade and actually typically pretty sizable discounts to net asset value as well. And as I say, that's not something that's specific to biotech, but that's like true across all sectors of the market. And then the other cautionary statement I would make on Fortress Bio. So I actually have a Stanford Business School classmate who I worked in, who actually is the CEO of a public company that earlier in his career worked for the guys at Fortress Bio, and he has a very high opinion of the deal making skills of the folks that run Fortress Bio. But the the sort of obvious contrarian point would be like if you just look at the long-term returns of Fortress Bio itself and all the siblings of Fortress Bio, it's been beyond horrendous. Like the amount of stockholder value that management team has destroyed over literally decades is actually pretty breathtaking. And so I would say that's a sort of another cautionary note. And I would also say that based on history, I have I have yet to see that management team do anything that that convinces me that they actually care at all about minority shareholders.
Okay.
And so that would be another cautionary point I would make. And so I say those things like, I told you like up front, I'm long Fortress Bio. I buy the thesis that it's very much undervalued. But I think it's important to remember those two things. One is the discount because it is a holding country company. And then secondly, I have seen nothing that convinces me that that management team is capable of or interested in creating value for minority shareholders. And I'd love to hear pushback on that. So I'll throw that out to people, other folks who are long Fortress Bio, so they can convince me that I should raise my position from where it currently is, based on the fact that we have a competent management team who actually cares about creating value for minority shareholders.
Much appreciated, Michael. And I imagine that'll be a good one to continue and chat in the discussion too. Like you said, with these holding companies, it's not just a biotech thing, it's across sectors where that discount stays there. I hear you on management teams as far as a lot of them that don't show. And unfortunately, it's not just Fortress. There's a lot of management teams in biotech
No
that
kidding.
show disregard for shareholders. And for every one turnaround story that works out really well, there's 10 that don't, like ARQL was a company known for pivoting. and for failing, and burning lots of cash until they finally had their BTK inhibitor that did well, and that was a good turnaround play for us that worked out well. But I think it also did some damage to me after, because when you get a nice winner like that, you try to find more turnaround plays. And I think quite a few of the turnaround ideas I entered after Arcule did not work out for me. Management teams kept doing what they do. So I definitely hear that cautionary note there.
I
Yeah,
would, maybe try to quickly comment on a couple of things. One thing I've said a number of times is that I don't marry biotechs, I date them. And I think that it can be dangerous I mean, the time factor in looking at a biotech investment is arguably one of the most important elements of the whole decision. And I know, like, I think Prescient Sage put up a note saying, "Oh, I own a few shares of bio. I'm like F bio. I'm massively underwater." But they go way back when. And if you look at the market cap of F bio, the market cap history, if you got into F bio 2, 3, 4 years ago, you're way underwater. And there's no way that you could be sitting here today thinking that you're going to get your money back or that something really fantastic needs to happen. And I think if someone has entered not just FBio, but any overbay, I mean, if you bought Arrow ARWR at 85 when Michael Melzer was pounding on the table saying that it was going to go from 85 to 150. I mean, if you're sitting on ARWR at 85, you're not a happy camper right now either. And I think the question for any biotech is, where are you in the life cycle of the company and where are you in the life cycle of the value creation? FBio is in a very, very different place right now than they have been. They're trading at a fraction of what they used to trade at, but they're now operating in a place where they have at least two significant commercial opportunities already on tap that are plugged in, that are functioning. And they're hitting on potentially a very big third one next week. And that's very different than where they were a number of years ago. That doesn't mean that they'll necessarily reach their full market cap potential, but if you bought them at $1.30 or $1.50, there's more upside, I think, than downside. If you bought them at $10 or $12 3 years ago, you're still fighting to get back to where you were.
Yeah, let me make a comment about following up on both of your comments here. I think you all clearly know what a sunk cost is, and pick a stock or pick a index or whatever. At some point, the process is going to change, and you're going to have some losers. The question is really, what do you do with the money today? So if you bought FBio at $10 or $40 and still hold it. The real issue isn't how much you lost, although that's the part that hurts. To me, the real issue is, what do you do today given the facts that you know and understand? What's a reasonable risk as opposed to whether you're up 300% or whether you're down 300%. It's what's going to happen today with the capital that you have to invest. So I think that's an important point. Some costs are gone. You can't get them back because the decision's done and time marches on.
Fair point. To make sure that we don't stick just on FBio, let's I don't know whether it's Tom, Jose, Steve, all you guys. What
I wanted to
ideas you have?
respond.
Whatever. Go ahead.
Yeah, I want to respond to Tom's question.
Sure.
About where XBI is relative to SPY.
Sure.
If SPY falls apart, then XBI is going down. But if we assume a relatively static future, I think XBI has a lot of room to run because XBI responds well to lower interest rates, and I think a lot of the future dynamics depend on takeovers. If we get a few buyouts, then you're going to have a lot of sizzle, and XBI will go up disproportionately, or so I hope. But that needs to happen, and it hasn't happened yet. So that, but it makes sense that it should happen.
I'm
That's
glad,
where I'm
Steve.
at.
I'm glad you brought us back on topic with the sector. One thing I've noticed during this week, I'm sure Wasim and others have seen it on X, is you have a lot of tech investors, a lot of guys in AI, and they're all posting, their accounts and how many millions they made or generational wealth they've created and so forth. And that's usually a sign of a top when everybody's getting really, really giddy. So I agree on other aspects of the market, but I also agree with Steve that with biotech, you zoom out to the highs of 2021, we're still way below that. And we're just at a point where quite a few tailwinds are starting to take place. So, the usual caveats and risks, but I'm personally looking forward to where it's going the next few years.
Yeah.
Someone mentioned Rigel. I just didn't want to let that pass because
Sure, sure.
I own Rigel, and I've actually been selling a bit of Cure to purchase a few more shares of Rigel. So I'm actually curious if anyone knows why Rigel has gone down so much and what other people think about buying Rigel right here, right now.
I think Tom, TDM Invest, Tom mentioned he was nibbling on the dip too, right?
Yeah, I feel kind of badly. I'm talking too much, so I'll try to get through it
Yeah.
quickly. But I've been in and out of Rigel. I mean, I've been a Rigel bull for the better part of 5 years. But again, back to the mode of dating biotechs versus marrying them. I've divorced Rigel a few times along the way. I mean, we've had some fights, and I let Rigel go its way, and I went my way. And when either Rigel or I got friendly again, we came back together and started dating. But I had when my goal for Rigel, looking at the chart, and Jonathan would say he was trying to grab it. I think you were looking for 16 and you didn't quite
Yeah.
get there. And
Almost pulled the trigger, but I didn't.
my view was anything below 20 recently was a good deal, and that was based on it running from 11 up to 28. That was last year in 2024. And I wrote it from 11 to, I didn't take it all the way to 28. I wrote it from about 11 to 25, and then we got a divorce. And I stood back, and Jonathan and I both watched it sink down. I felt when it got under 20, it was a good buy, and I started loading it. And when it went down to 17 or 18, I loaded a lot of it. But my goal was for it to go back to 28. And when it went to 27, 28, I started dumping it again. And by the time it hit 33, 34, I had completely bailed out of it. I was surprised to see it overheat. I felt like it was overheating running up into the 40s. And so I stayed out of it. And now that it's back under 30, I've asked her out for another date. I think below 30, Rigel starts to look pretty good. At 40, I think Rigel starts to look a little ugly. She's got some wrinkles up there.
Fair enough. Moving on to the final segment, guys. Top ideas. What is your top or your favorite ideas on radar? You don't have to say your number one, but just the names you're finding most attractive as we enter October. Maybe some that we've had a lot of biotech names run up lately. Quite a few are overvalued, but there's a lot of others that have not participated or haven't participated to the same extent. So whether any of you guys, Wasim, Jose, Tom, all you guys, anything still looking especially shiny?
Yeah, I'm interested to hear from Jose, actually.
Why?
Oh, he's here. There he is. Well, Jose has been on a
That's
run
some great
lately.
ideas. So
Yeah,
yeah.
Jose's been on a run. We like hearing from Jose.
No, yeah, so sorry for that. Last couple of times I was one in a musical conference and the second one was in Turkey. So no, actually I have a little bit different perspective in general. So I won't deny that the last 2, 3 months have been great. I won't deny that. And this week in particular, starting with Metsera acquisition, and pretty much, I would say it was a name that could reflect better the mood these times. Is Scholar Rock, the one that had a
SRRK,
CRL and then
yes.
went
Yeah.
up. I don't have that position, but just the fact that name is able to go up after a CRL, it should tell you the type of environment we're in,
Yeah,
right?
context. Most
So
people,
True.
complete response letter, 50% haircut, and Jose, this one went up, right?
exactly. I don't have that position, but I don't have I have never been in there, but just so you guys know, that tells me two things. One is looks great, and secondly, it seems to me a little bit frothy. And on the one hand, I see, yes, interest rates are conducive at this moment, but I would always caution that interest rates always go accompanied by inflation. And as long as inflation figures stay under control, interest rates should go in a downward trajectory, therefore good for biotech. So it should be both things together. What I'm doing right now to my portfolio is literally holding, reducing a little bit exposure here and there. So to Metsera, I really took, of course, sold the position, put partially back into Unicure, um, um,
Metsera, MTSR, the obesity player that was just
MTSR,
bought out.
yes, yes. And this was a sizable position. At some point, it was a top five. But I put portion of that money back into Unicure for two reasons. One is um, the readout, the indication it's going after. It's in my opinion unique. I've been familiar to Unicure 5 years ago. I was in the name. I was quite long. It didn't work out for me by then. That was around 2020. But seeing it back and having seeing the data back in the way it was, put me back into the name. So that's one of the things that I plan to manage it. Among the positions that I've got, I won't deny that I'm being quite active in atopic dermatitis.
Mhm.
And I know there's a lot of people super bullish on Nectar and Corvus. I have both of them, but I have small positions in them. The reason why is because my biggest name is a different one, which is Apogee, which
APGE, correct?
APG, correct. And that is a top five, has been a top five for the year. And performance this year has been mediocre. So profitable for me, profitable since I bought it, but compared to other names, mediocre. But I consider it to be the one that can take me to a potential best-in-class assets among the ones that I've got. So that's one that I'm certainly thinking of adding over time. I'm not in a rush, but I still stick to the hypothesis that that's the best in class of the bunch of the names I see. Coco being the one that is um, wild card, but the data so far is still too early for me to put a sizable amount of money.
All right. So Apogee is a big one for you.
Yes.
Madrigal, MDGL, still your top, I believe.
Yes. So top two, Madrigal and Avidity. Madrigal
RNA.
has been, yes, RNA. RNA for me is another focus. I've seen PepGen's read out a couple of days ago. That's great, but it's still early. I would be more interested to own a pair with Dyne Therapeutics.
Mhm.
But at this moment, I consider RNA to be also the one where I have solid leadership team, first in class on three assets, one in phase 3, two in phase two, phase three, two in phase, one in phase three, DMD and registrational potential, and FSHD phase two with potential registrational, plus a preclinical in precision cardio, which is the ones partnered with Bristol Myers. So I have optionality in there. And yeah, you would say, okay, 5.6 billion market cap, yes, but it has $2 billion in cash. So to me, that's a name that I not only plan to keep it at second position, but I plan to keep adding it. And eventually, at some point, I'll be out of Madrigal, and that would be the one that might be my top position.
Okay.
Yeah.
Yeah, I have
Appreciate
a
it.
question. So I'm also long Madrigal. Why, why though would you make Madrigal your top position here? Like, what do you see? What do you see as driving the stock higher from here? Like, I sort of have a middling position in Madrigal. Like obviously I like it because I own it, but I don't love it. Like, it's not a top position for me. Um, so I'm just kind of curious why you like Madrigal as much as you do.
Yeah. So a little bit of history. With Madrigal, I got in just before phase three readout in late 22. And I got in via 100 via call options, January call options for $2,300. Of course, the readout went well, exercise them, added, and etc. The reason why I keep it as top position, I don't expect this to be like the as this moment when I see my portfolio, the one that would give me 2, 3, 4x from now. I already have that. But I have a commercial stage biotech. Number one. Number two, the current asset, Resifra, is currently best in class, first in class, and pretty much taking the market with Novo Nordisk, which is launching right now. So both of them are expected to own the market for at least 1 to 2 years. So you have the market with 1, 2 players. The market appeared to be larger than initially thought, right? And you could see that via the ramp-up sales in the last several quarters. So if in the next earnings, things go the way they were going before, you might potentially get a run rate blockbuster drug in there. So yes, that's one thing. Then you have high quality leadership. So CEO is Bill Siebold. Who is Bill Siebold? He was the one that launched Dupixent. What is Dupixent? That is the leading atopic dermatitis drug. So you have top quality leadership, top a high quality product, a market that is growing, and for at least 2 years, they are the ones. And on top of that, as a defensive position, they partner with with an asset that has a GLP-1 component that they can be potentially combinable in the future. So basically, they are taking the right steps to be a leader in the market. Whether they are bought out or not, who cares? So at this stage, they are the ones that can be potentially profitable. Risks, of course. What if GLP-1s or Novo Nordisk with a lower price takes much higher market share than expected? Yeah, of course. But given where things are right now, I would say that even at 10 billion market cap, still attractive. Would I add right now? No, but I can hold it.
Yeah, thank you. And just to add to that, I've owned Madrigal, sold. The reason I had Madrigal and I covered it, made a video in regards to it, was because I was diagnosed with fatty liver, but I was like skinny. I was like, well, it doesn't make any sense. I was like, well, what's the solution to this? And I was told, well, you need to lose 10% of your weight. Lost 10% of my weight, went back. Well, I had some fibrosis because, well, the fat, it becomes, once the fat leaves, it leaves scarring behind. And then I was researching and I found out about Madrigal, and the Resdifra in some cases reverses fibrosis. And it's the only drug that can do that. Now, there were some people saying, well, GLP-1s can get rid of your fatty liver. Well, not necessarily, because GLP-1s are going to make you lose weight, which is what's needed to stop the fatty liver to get more fatty, but it doesn't directly address the issue, which is the fat in the liver. So, yeah, as of now, there's nothing else. So yeah, that's all.
Yeah.
All right. And Wasim, while we're at it, is there a favorite idea for you into the close here?
A few.
Go for it.
One is Moonlake Therapeutics. I'm just waiting for the readout. I've been waiting all this month for hidradenitis suppurativa. I know there are a lot of solutions for it, but this seems to be probably the best in class. And now the
What's
readout,
the ticker for Moonlake again?
MLT,
MLTX?
MLTX, correct.
Okay.
So,
High binary risk, right?
not, I mean, phase two was really good, but now they're just trying to replicate phase two in phase three. So, very great efficacy, safety profile. Now the question is, can they replicate or improve phase two efficacy or not? And that's where it's standing. For me, yeah, I'm waiting. I'm checking my phone every 5 minutes. That's the bad thing about catalysts. Others are Biohaven. I think it's in your portfolio,
Yes, BHBN. Mhm.
especially with what's happened with Cure. So I'm still researching that one. I'm also looking at Syndax and comparing it with Cura, which both have catalysts, I think, by the end of the year, if not next month. Those are the names I have for now. And then I'm trying to fish or hunt some value names. I'm finding some biotechs with twice the cash than the market cap. And I don't understand why a market cap would be worth half of the shares of the cash of a company. So trying to learn different ways of investing in biotech, and not only commercial and catalyst, but also value, which I've been learning tons from Tom. So thanks
Yeah.
for that.
Yeah.
Well,
Also, I do want to just say a name that I'm focusing and planning to add over time is one of my smallest positions right now is Oruka Therapeutics, ORKA,
okay.
which as like Apogee, they all both come from Paragon, but the latest readout was quite interesting in psoriasis, and there was a private placement around 15, so that gives me two reference points to own and add over time, given the market cap is
Mm,
quite attractive to me.
okay. Anybody else to close? Other top ideas you want to share with the group, or not even if you don't want to give the full thesis, but just, hey, this is a ticker to keep on your radar in coming months.
Well, one observation is when I hear Jose talking about Madrigal, it makes me feel like a junk collector because he's so eloquent about the CEO and all these great things that they do. And, I look at these value plays that I'm doing and I feel like I'm kicking tin cans down the road. But speaking of tin cans, I'm warming up to Heron, Heron, HRTX.
Mhm.
And there's a few things that are kind of sleepy about it. One, they just did a refinancing, and to me, it looked pretty good. And it cleans up their balance sheet quite a bit, and it gives them a lot of resources. The market didn't like it, and they've punished the stock mercilessly. But as we sit here right now, they've got 100 and what did I write down here? 160 million in sales and a market cap of like 220. So, I mean, they're not too far off of one for one on sales versus market cap. They've got three or four drugs. I think the view on them is that the drugs are kind of doggy, but they've got a new management team. And, Jonathan, you and I were talking earlier in the forum about when companies flip to a we're in business to make money mentality. And the new management team at Heron is very, very focused on making money. They're very close to break even. They've made a little money, they lose a little money, but you know, they're they're not mowing through their capital, and they've got multiple approved products. If I don't know to what extent, but historically, Kevin Tang has been very involved with HRTX, and he has a tendency to make things happen. I did notice one thing that was lurking in their financials, and I have no idea whether it's good news or bad news, but their raw material inventory last quarter jumped a lot. I mean, it went double. And there's only two or three reasons why your raw material inventory doubles. One is that somebody just offered you a whole pile of raw materials at an incredible price and you couldn't resist and you bought way more than you need. Another reason is you're building a lot of inventory for something that you think is going to happen in the future. There may be another reason, but those are the two things that come to mind. I don't know which it is, but um, it struck me as very unusual. And so, with the combination of the refinancing, the very low value, and the big jump in raw materials, you look at the chart, I mean, it's been dredging the bottom. I mean, it's behaving like a flounder. But I think it's at a place where I see a lot of potential upside. I don't see a whole lot of downside. I mean, it's just valued incredibly cheaply. So that one's kind of catching my attention.
Okay. Add that one to my list to at the very least to revisit it and see what's going on. Anybody else? Final idea before we call it a close? Hubi, we appreciate you attending as well. I think that might be your first, or you've been here before.
No, first time, and I was mostly lurking, trying to listen. Yeah, I thought about participating, but I think I got a bit too late. And yeah, just have a question for Jose, but maybe yeah, trying to understand a bit what's your stance at the moment on Abivax, but that's a bit outside of the scope of the hot ticker idea, I think, because it's
Well,
been bumping super high now, but still, I know it's still part of your position, so I was just curious about that one.
yeah, and it's a great question because that's another one. When I was finishing talking, it's like, hey, I should have mentioned about the Abivax. And first of all, to be honest, the way I got into the name was thanks to Adam May and reading his post the day before, the same day before readout, and that was pure luck. But after that, reading it middle of the night, figuring out, okay, this was a familiar thing. I used to own Prometheus Biosciences a few years ago. That was my second position back then, and it was acquired by Merck. And it basically gave me all the way back. What do I think about a current market cap? six 6 billion or so. You have a product that appears to be differentiated in oral in UC. There is a maintenance readout that when you look into other cases, when they show phase three and then a maintenance, there seems to be some sort of correlation, one versus the other. You have a CEO that has been in M&A before. So one way or the other. So yes, we all want our names to be bought out by yesterday. But what if that doesn't happen? And I see this name as potential to have a standalone product and be competitive and current with a current market cap or valuation, being able to go the distance and compete in that space, at least in UC. I don't know about Crohn's disease, maybe it's too early, but in UC, you have a competitive product. And with the current market cap, that is quite constructive. So the question becomes, what's the optionality going forward, right? So, but given the familiarity that I've had with it, I can see myself still adding it. The problem is that I prefer to add lower. I would love to add in the 60s. I would love to add in the 70s, right? Reality is I have no idea if I'll get it, right? So, but upper 70s, low 80s, I'll be fine, given that my current cost is in the teens because of those ads. Yeah, so I have flexibility.
Well,
Just to add to that, I saw your post, Jose, that you bought in around 47. I saw the post that May Adam posted as well. I tried to go in and buy some at around 50. I think it was pre-market, but the ticker is not available in Robinhood. So
Come
I
to
think it's time.
Switzerland, man. Come to Switzerland. It's 10 a.m. here. That was that. It opened, it was 50, and I didn't think twice. And I added by then because the day before, I think I started at 10.
I'm in the wrong country. I got to go over there.
You are in the wrong country. It's 10 a.m. It
Yeah,
was
no,
10
definitely
a.m.
Europe was promising
It
there.
was a window of opportunity, right?
But
And
the,
yeah, I took advantage of it.
yeah, but the thing is, I saw it at 50. I was awake. I was on my phone, but I use Robinhood as my broker, and they don't offer Abivax.
Interactive brokers, man.
I have to switch because
That's
I was
this
so
is
so
free
mad. So
advertising.
I'm sure Abivax would have been higher at this point if people
Interactive
would
brokers helps me
have
out.
access to it.
Yeah, yeah, that's all I can say. It's interactive brokers has been very, very efficient in these types of situations.
Yeah, it's most of the time that different won't be a big deal, but like Wasim said, there's moments where those small differences or one's available, one's not can be huge.
Yes.
Thank you everybody for all the interaction. I like how we can step on each other's feet a bit, share some ideas. Those new to ROTY Biotech Community, we have quite a few channels in chat, and they all came by trial and error. The idea being they're actionable, they actually help you. Otherwise, what's the point of doing it? So the two main ones I wanted to mention are top 5, where you can, like Jose does there, share your top 5 ideas. Tom does it too. What your top 5 current holdings and sometimes why you own them. And what's nice is it adds value for the person who shares, because other people can push back and say, hey, I don't like your number 3 holding or your number 5 stock. Here's why. And then on the converse side, it's nice for other people to see those ideas. The other channel is our real-time trades channel, which it doesn't have to be real time in the moment because most of us have other jobs, other things we're doing. But when you do think about it and saying, hey, I bought such and such stock because I think this, it's nice because in that moment, you'll get commentary, or whether it's criticism or whether it's other people saying, hey, I'm buying this too. So it's nice to see what each other is doing and why. That's the whole reason it's there. So yeah, glad to see people having a good week, having a good year. And hoping more of that's to come, making sure we don't do any of the FOMO purchasing, unstupid decisions. Like Tom said, it's really easy at highs, at least for me. The more confident I get, or especially overconfident, is when I'm in danger of drifting away from my chosen strategy, trying to chase returns, getting too aggressive. So that's my encouragement for everybody is when you feel like you're a genius, my experience has been that's when I usually do something stupid. So
Mine too.
yeah, so let's focus on
Hey,
making
Jonathan,
wide. Go ahead.
just real quick, I'll
Sure.
pitch my 4 top ideas in
Sure.
under 2 minutes.
Go for
So
it.
I have 2 classic hedge fund type ideas, which I think are of zero interest to you and probably anybody else in the ROTY community. So those 2 ideas are ADMA Biologics, ADMA, and also Grifols. So those are both blood products companies, and they're incredibly unsexy. You're not, in all likelihood, gonna be making cure type. You're not gonna wake up one day and find either of those stocks up 300%. But I like both of those stocks for essentially the same reason, is that they're just fantastic cash flow generation plays. ADMA actually is basically at zero net debt at this point, whereas Gryphol still has a humongous amount of debt on its balance sheet. But as they generate cash, they pay down the debt, and that both improves the balance sheet and also it grows earnings because then they don't have to pay interest. Then they're paying interest on less debt, basically. So with Gryphols, you have this sort of beautiful deleveraging story. And if you look at the multiples that the stock is trading at, and if you believe that they can pay down the debt, then the stock is just crazy cheap. And then with ADMA, I've actually owned ADMA for years. And the reason I bought the stock, and it's actually my largest position and it has been for like years and years and years, is that it's a fairly safe, boring business. It has incredible barriers to entry, but like once you build the fractionating plant and put all the infrastructure in place, it just generates humongous cash flow. And so every day I honestly just wonder why private equity has not come along. Like, if you just run the numbers, you could do a leverage buyout on ADMA given the cash that it generates and pay substantially more than the current market price. And just by the by, private equity did actually make a buyout for Gryphos, although it's sort of it's a complicated story, but the deal didn't end up going through. But a Canadian private equity actually did attempt to take Gryphos public, but it just seems to me ADMA is just a classic PE privatization play. And then my top two clinical stocks, Jonathan, one that you and I have talked about is Trevi,
Okay.
which I just think it has fantastic data, just like absolute best-in-class data. It's a really big market. The downside is that it doesn't look like we've got any real catalysts until like basically second half of next year.
I think that was my
But I
hang up
think
to the catalyst.
yeah, yeah. But I mean, they've just put up fantastic clinical data, and I wouldn't be shocked to see them bought out. But that's the lazy man's thesis for owning a stock. But it's a big market, and I really do feel the stock is undervalued relative to the data that they've shown and the size of the market. And then my other top biotech aside from TARS is PTGX.
Okay.
And they're actually written up by a hedge fund investor recently. It's an interesting story where so they have a drug in PV which is partnered with Takeda, and then they have the psoriasis, etc., that's partnered with J&J. But then they also have an interesting pipeline. And so depending on how you run the numbers, you're essentially getting something for free. Like reasonable people could argue about how much you're actually paying for and how much you're getting for free. But I really do believe that PTGX is undervalued relative to the two late stage drugs and what looks to be a pretty interesting early stage pipeline. And management also appear to be incredibly competent. So I'm confident that one way or another, investors will get paid in PTGX. Like maybe they carve out the two partner drugs, or maybe they get taken out by J&J and we get a CVR for the pipeline or the Takeda drug or whatever. But either way, it just seems like there's a lot more value there than is currently reflected in the market price. So those are my four top.
Glad you bring PTGX back to my brain.
Yeah, no, I'd love to hear.
To get
You've
back
had some
into
fantastic
it.
ideas, so I'd love. I really respect your judgment. I'd love to get your thoughts on PTGX or anybody's for that matter. So
Sure.
Thanks for that.
That'll be a good one to continue the conversations on.
No,
Michael, thanks for those top ideas too. Before we close, I appreciate it.
I'm not sure. Yeah,
And I appreciate you attending. Guys, I guess we're running a little bit over, so I'll go ahead and bring it to a close. Hope you have a wonderful weekend. And yeah, look forward to seeing where this goes in coming months to close out the year too. Cheers.
See you.
Thanks, everyone.
Bye.